Hey guys, Bryan Lebo here with your Las Vegas update video for May. Now that the weather's heating up, so is the market. May is always the largest month of the year for sales in Las Vegas, followed by June, then July, and then we start to really decline starting in August. So let's take a look at some of the analytics to see how the market is actually performing right now. First up is our NODs, or Notice of Defaults. We always check on this to see what kind of foreclosure activity is occurring now, since this dictates how many foreclosures we'll see on the market 6 months or so down the road. As you can see on the screen now, last month we had 736 NODs filed. This was down from 911 in March. Compared to the 4,000 a month that we used to have, these numbers are pretty pedestrian. Put short, I don't expect that shadow inventory of foreclosures to hit anytime soon. Next up is the current inventory levels. You can see on the screen now that we ended April with 7,201 homes on the market. Considering we had 5 straight months of declining inventory, it was great to see that the inventory stabilized finally. Inventory is a very important indicator because the less homes on the market means more buyers are tending to fight over them, which in return creates price increases. Either way you cut it, 7,200 homes is a very low inventory level. But when the market was nuts 2 years ago, we were down to only 3,200 homes. So even though we're low, we're nowhere near the bidding war era that we just came out of. Okay, now that we know what our supply looks like, let's check out demand. Last month, we sold 2,580 homes. While this was up 4% from March's 2,487 homes, that's what's expected to happen this time of year. The great news is that sales were up 5% from last year. This makes 2 consecutive months that our sales have increased over last year. So this is pretty encouraging news. So since sales were up, what effect did this have on our median price? The great news is that the median price went through the roof last month. We went from a median sales price of $201,575 in March to $210,000 last month. Literally, prices went up 4.2% in just 1 month. Last July, our market pretty much plateaued at $200,000. Now, from July to March, the median price only went up $1,500. But in just 1 month, the median price jumped $8,000. That's just nuts. While I'm not seeing much of a change on the medium to higher end of the market, the lower end of every area has become very competitive. Here in Summerlin, anything priced around $200,000 has multiple offers within a couple of days. As a result, I'm seeing homes that sold for $180,000 just a few months ago now sell for $195,000 with a line of buyers out the door. While the medium and higher end properties are still very much consistent on pricing, it's this lower end of the market driven by FHA buyers that I see bringing the market back up. So while I'm on the topic of FHA buyers, I wanted to take a moment to share some changes that were originally scheduled to take effect next month, but now was pushed back to mid-September. This is very important for any buyer looking to get an FHA loan in the near future. Basically, there are 5 major changes. First has to do with student loans. Right now, if your student loans are deferred, then those payments don't even count against your debt-to-income ratio. Now, come September, those payments count either way against you. Second, has to do with gift funds. Now, if someone is gifted down payment money, say from a parent, not only do you still need that gift letter, but the lender needs to see a copy of the bank statement from the person who's providing the funds. This also goes into any large deposits that may appear in the buyer's bank account. Basically, FHA wants to make sure that they know and understand where the buyer's money is actually coming from. Next is actually a really big one. This had to do with credit cards. As long as the buyer had paid the full monthly balance every month for an entire year, then whatever the balance on that card currently is won't even count against the buyer's debt to income. But if the buyer has even one late payment, then 5% of the current balance will count against the buyer's debt-to-income ratio. Next has to do with what amounts to cosigning. Let's say you cosign for your brother to buy a car. Now, that car payment counts against your debt-to-income unless you can prove that your brother made 12 payments in a row on time. Now, if the buyer just recently co-signed, you still have to show at least 3 straight payments, meaning if you just co-signed, say 2 months ago, then you need to wait another month and then pray that the payment is made on time. The last change has to do with employment, and really, it's not even a big deal. If the buyer has changed jobs 3 times in the past year, then the lender needs to take additional steps to verify employment. Additionally, if there's a 6-month or more gap in employment, there needs to be 6 straight months of employment since then. Realistically, if you've changed jobs 3 times in the past year, you're probably not really stable enough to worry about taking on a new mortgage. So let's quickly wrap up all this. Inventory is very stable, but sales are up and the median price just went through the roof. So what does this mean moving forward? Like I've been saying, for the most part, I don't see much of a sense of urgency on either side. Unless you're a buyer on the low end of the market, you still have ample time to make a good decision and not feel pressured. This month is the best month of the year, so if you're looking to sell your property, do it now while the demand is high. If you're lucky enough to have a really nice home to sell, this is the time when you'll see multiple offers. This means more money from emotional buyers and certainly more favorable contract terms like a leaseback. But just because prices went up last month doesn't mean that buyers and agents want to waste any time on overpriced properties. You're better off pricing the home reasonably and fishing with a much larger net than being unreasonable and holding out for that cash buyer that likely doesn't even exist. If you can't sell your home in 30 days, either your agent isn't doing their job or your home's just overpriced. Thanks again for watching. Please click here to subscribe and have a wonderful May, everyone.